Hello everyone, welcome to Financial Markets by Dr. Supriya. In this video, we will be talking about RBI and its regulation for NBFCs investment in alternate investment fund with special focus on the concept of evergreening on which the RBI has tried to put a grip. Recently, we have seen a lot of news related to RBI trying to tighten the rules for the banks and NBFCs which are investing in alternate investment funds. To understand it, let's first understand the functioning of NBFCs. So, in short, NBFCs are non banking financial companies. They are regulated by RBI, Reserve Bank of India, and their main business is lending. They are governed by RBI, but RBI does not permit them to open saving bank account for people or current bank account. NBFCs cannot accept deposits in that form, but yes, they can accept deposits in the form of fixed deposits. This amount of FDs is used by the NBFCs for the main business, which is lending. So FDs act as the inflow for NBFCs and lending is the outflow, as we can see in the chart here. As per RBI norms, the money which is lended should come back to them within 90 days time period. On maturity, if the borrower company, say for example XYZ company, repays the borrowed money back, then they pay it with the principal amount along with the interest. This also generates profits for NBFCs, and this money again goes back in the inflows and then it can again be used for lending. Now suppose on maturity after 90 days, if the company is unable to pay back to NBFC, they might request NBFC that we are unable to pay and extend the time period. But NBFC cannot do so because this is not permitted to them by RBI. They have to stick to the norm of 90-day period. Now, in this case of non-repayment of loan by the borrower company XYZ, it becomes a bad loan, which is popularly called as non-performing asset, NPA. Now, if it becomes a bad loan, then what happens? Is it good? Definitely not. It can create a negative impact on the share prices of the company if they are listed, that is NBFC. Negative credit rating can be created. Share prices can fall down if they are listed. FD rates can grow up. And overall, it will earn a bad name for the NBFC for recording an NPA. So, what option do the NBFC have if they don't want a bad loan to happen? Now, here comes the process of evergreening. Under the process, the NBFC involves a third party known as AIF, that is Alternate Investment Fund. We already had borrower company, we already had NBFC. In case of default about to happen, they involve the route of AIF, that is Alternate Investment Fund. Whenever the borrower company informs the NBFC, this is a borrower company. Whenever they inform the NBFC that we are unable to pay within 90-day time period, then NBFCs tell them, okay, fine, you issue fresh bonds and the borrower company agrees to it. On the other hand, NBFC, now it is not allowing NPA to happen. So the second option it is opting is to follow the route of AIF. So NBFC approaches alternate investment fund and invests in that fund and asks the alternate investment fund companies to invest in XYZ company by buying the fresh bonds of this borrower company. Now observe the chain. NBFC invested money here, this money utilized and invested by buying fresh bonds, so they get the money back. Getting the point? So we observe the chain. The rule is to invest minimum 1 crore in AIF. So NBFC has to invest minimum 1 crore rupees over here, and then later more amount can be invested. So AIF buys the bonds of XYZ borrower company gets the money and pays back to NBFC. Problem solved. Now let's understand that why will alternate investment fund will invest like this. The answer is that AIF does not falls under the purview of NPA. They are not under the jurisdiction of RBI. Instead, they are under the guidelines of SEBI, which gives them a time period of 7 years to settle down settlement. And that's a long time period where a company can come up in a favorable position and repay the money back. Now let's see what RBI says under the new guidelines in news related to evergreening process. RBI says that alternate investment fund cannot purchase bonds of existing borrower of NBFC company. If already this kind of investment exists, then they have to exit within 1 month time period. And if they don't exit, then NBFC has to keep aside 10 crore rupees from its own accounts, which is an added expense for the NBFC. That's how they are trying to grip in the evergreening process, which can be a plague in the economy, because if one system collapses, then all the system automatically is going to collapse. And we cannot forget the subprime crisis which happened in 2008 and 9. So I hope I was able to explain you the concept of evergreening, which is in the news since a couple of days. For more such content, you can stay connected by following my LinkedIn handle, my YouTube channel, my Twitter handle, now X, in the name Financial Markets by Dr. Supriya.